Hello, everyone, and thank you for taking the time to join our webinar called What an Effective EDD Program Looks Like. My name is Anu Sood, and I'm the Director of Marketing at Caseware RCM and today's moderator. Now, before we get started, as many of you know, COVID-19 has disrupted the way we do things. For many FIs, the due diligence process has become more difficult with the restriction of movement and the changes that we're experiencing. And the need for due diligence has not gone away. In fact, in some areas, it has become even more important. So, for example, there was a recent story where the AML compliance team of a Rhode Island bank was instrumental in advancing a federal probe against individuals who were trying to obtain government subsidized loans offered under the CARES Act. Now, the CARES Act is the Coronavirus Aid, Relief, and Economic Security Act in the US. It was the enhanced due diligence work done by this compliance team that determined that the particular restaurants applying for the loan didn't have any employees. In fact, they didn't even exist. So in today's webinar, our presenters are going to provide their perspective on what should be included in every EDD process. And that happens whether it's for loans or mergers and acquisitions or new supply chain agreements. They will also discuss some tools that will make the process easier. So a little bit about our presenters today. Andrew Simpson is the COO at Caseware RCM and has more than 20 years experience building businesses in the field of information systems, audit and security, data analytics, anti-money laundering, and forensics. He's often a thought leader and a contributor to conferences on AML. Now, prior to joining Refinitiv as an EDD transformation manager, Nicholas Belaney has served in a range of risk research and advisory roles within the legal and financial service industries. Most recently, Nick was the Director of Business Intelligence at RAIN, which is the Risk Assistant Network and Exchange, a network-based risk intelligence firm where he led the production of customized research to support client inquiries, primarily focused on non-financial transaction due diligence and analysis within the multinational corporate and private equity space. He previously held AML KYC-related roles at MUFG and Skadden Arps, as well as research and litigation roles at other U.S. law firms.
So thank you for having me, even though virtually from New York under lockdown for COVID. So I'd like to start by just going over the agenda really quickly today. We intend to just go over what is due diligence, kind of disambiguate the definition, due diligence and its genesis through the BSA, and the expansion of EDD as we've kind of seen it over the last few years and kind of how we see it going forward. Within that context, we'll do a brief history or brief overview of the BSA, as well as kind of look at EDD and third-party risks, as Anu alluded to earlier in the call, as well as the practical implementation of EDD, followed by key takeaways and a Q&A. Before we start, if you are, have been in financial crime kind of professional, whether it's research, compliance, whatever aspect, over the last few years, these are two great books, especially if you're in quarantine right now and have time. Billion Dollar Whale is a great true story about financial crime and the squandering of the 1MDB fund. It's actually a story that seems stranger than fiction, as the money squandered from the fund actually financed the movie Wolf of Wall Street, financed various other like real estate assets, Hollywood pictures. It's pretty unbelievable. So I highly suggest checking that out. Secondly, Narconomics is a great book by an investigative journalist named Tom Wainwright. It basically looks at the cartels in South and Middle America and how they have applied modern business principles to their enterprises to remain competitive in their obviously illegal markets, but just shows the adaptation there, which is obviously topical when we're talking about financial crime and regulation, especially illicit finance. So what is due diligence? In terms of general perceptions, the way having worked in due diligence for quite some time, I always think about the best gauge of clearly and concisely defining it is how I tell it to my parents. Typically, there's not a kind of, I think, a general consensus, or there wasn't. Initially, it lives in the corporate legal and regulatory lexicon about assessing a situation, especially a commercial relationship. It's oftentimes a voluntary collection and deep diving analysis of information. I think only in the last few years, evolution over time kind of also evolved that regulatory application of due diligence, especially enhanced due diligence. So we can properly define it as the research, collection, and analysis of information, which effectively is the engine to your anti-money laundering, know your client program, and its ability to appropriately assess and reasonably mitigate risk to your enterprise by doing just that, by knowing your client and having the information to make those decisions. I think what we're seeing now is the kind of evolution of that due diligence and just the regulatory application, going beyond that regulatory aperture, extending to reputational risks, extending to sustainability initiatives, and extending to, related to sustainability, ESG initiatives that we're seeing with financial institutions, we're seeing in the financial markets generally, as well as we're seeing with governments. This slide, in terms of due diligence failures, I tried to pick more recent issues that have come up with recent regulatory fines being levied against primarily financial institutions. Just to give an idea of a compliance failure is also a due diligence failure. Granted, there are many components to a KYC AML program, which concerns, the clear conveyance of risk relevant information to make sure every stakeholder is informed. It's worth kind of reiterating the point that due diligence and that research is the engine of a robust KYC AML process. In that vein, these recent enforcement actions, like Swedbank was hit with a $386 million fine over money laundering breaches related to Baltic states, is kind of emblematic of how things can go wrong. When Swedbank was hit with that specific fine, as a publicly traded company, they lost, I believe, a third of their value at that time. I'm not necessarily sure if it's rebounded since then. Other kind of compliance sanctions and AML failures demonstrated here have been with a non-financial institution, obviously Apple, and OFAC characterized as a reckless disregard, but let's just say it was a compliance due diligence failure in terms of their supply chain. The Industrial Bank of Korea faced $86 million in sanctions around compliance. That was related to purported failures that led to about $1 billion of transactions related to Iran, obviously in breach of US sanctions against Iran. BSA compliance program that wasn't effective. A similar situation with Australia's Westpac, which resulted in 23 million money laundering breaches. The bank has since put money aside, I think something to the tune of 580 million US as a kind of rainy day fund in anticipation for what's going to happen next. I've also included the ESG controversies article here from the Financial Times, which just shows the escalating importance of ESG and how it's actually being attached to monetary values and becoming part of EDD programs, as we'll get into later in this presentation. For a brief history of the BSA, as many of us know, it started in the 1970s it was the first laws to fight money laundering in the US, primarily targeting nefarious activity, criminal activity, but also targeting cash-intensive businesses and the idea of tax evasion, but more so just illicit finance. As this has evolved over the years, especially in the 80s and 90s, if you look at the different amendments, the different acts that amended the BSA specifically, most of them were attached to the war on drugs, to kind of any kind of narco activity, any kind of illicit activity that was not being captured by the government. It effectively deputized banks to be, to an extent, a supporting character, yet a fundamental character in going after bad actors, especially in trying to launder their money through the banks so they could build criminal cases and obviously prosecute accordingly. I think what we can all remember and what's been the shot of the arm to the BSA was the US Patriot Act in 2001. It was effectively the BSA on steroids, which created the more robust structure, or at least the foundation of it that's obviously been built upon, that leads us to today. The kind of genesis, let's say the catalyst for this was the similarities between money laundering, which is obviously it's cyclical. It starts at one point, it goes in the circle as it's cleaned through multiple accounts or multiple mediums, and it comes back to its starting point. Terrorist financing, on the other hand, is more linear. It starts at one point, it goes through multiple mediums to get to an endpoint. It therefore has no intention of going back to its origins in a clean state, as money laundering does. So ironically enough, these two processes use similar mediums to transfer funds, to mask funds, although they have different ends. As such, the Patriot Act was implemented to add counter-terrorist financing measures to the BSA, which led to the effectively building up the existing KYC AML measures that we know today. Obviously, since then, numerous amendments have been put in place, numerous final rules, the last one of which was around 2016 concerning beneficial ownership. But as we all know, the BSA is constantly evolving in terms of what is required of us and our enterprises in order to identify, assess, and mitigate risk, as well as effectively help mitigate, identify, and potentially act with our government partners on nefarious activity within our banking system. Harkening back to my point that due diligence is effectively the engine of a robust KYC AML program, this is a very high level KYC AML structure. Starting, you initiate your know your client protocols with your customer identification process, gathering and verifying client information. You then push it into your overall client due diligence apparatus, typically starting with your gating factors around politically exposed persons, OFAC sanctions, watch lists, sanctions lists. Those gating factors that should be the entry point. A lot of folks have decided to pump up the initial CDD due diligence depending on their internal considerations for their industry, for their risk appetite. Obviously, this goes through their internal risk assessment that they've built. It applies a risk, which then determines the necessity for enhanced due diligence, and that may be tiered out accordingly based on risk level as well. Obviously, if this was in the bigger picture, it's one piece of a bigger apparatus that contains transaction monitoring and transaction reporting and all of that as well. But we'll focus on due diligence for the time being. So one of the major questions, the CDD is obviously the overarching program. EDD is what happens when there's an escalation, when there's seemingly a high-risk client. More and more, I think EDD is kind of expanding to the extent that a lot of baseline CDD procedures are entailing more and more research elements to determine the risk of a potential and/or existing client. To that extent, I've listed out here your CDD baseline searches and why they effectively matter. Your baseline searches, as I alluded to earlier, are typically your PEPs, your OFAC sanctions, your additional sanctions watch list and blacklist, as well as adverse media checks. I'd like to stress the importance of adverse media checks and reputational risk generally, as things that have not yet been formalized via litigation or via sanctions or watch list or blacklist or regulatory action are oftentimes captured in adverse media checks, or at least targeted checks to basically to identify negative media and parse out the situation, determining the legitimacy of that media. If these rumblings could at some point be formalized into a regulatory proceeding or a legal proceeding that may adversely affect your operation or your reputation or something to that effect. So ideally, you go through the CDD baseline procedures, plug it into your customer risk rating profile and ranking system. Inputs for this system ideally should be the geographic location of the customer entities involved themselves, the products and services being purchased or utilized, as well as the CDD research outcomes. These would be baseline considerations and inputs to build your customer risk profile. Obviously, that risk determination would then lead to your level of diligence you deem adequate based on your risk appetite. That would lead for most high-risk clients to enhanced due diligence, which should determine ideally these high-level kind of considerations here, which would be a source of funds and wealth. For a private entity, that would be their commercial dealings or their financials to some extent. Location, their geographic location of a business. Obviously, the jurisdiction determines industry to some extent, and vice versa. Just think about the difference between a fintech firm in the UK versus a fintech firm in Hong Kong and or China. Obviously, very different implications in terms of how you would house and store data, how you consider intellectual property, those sorts of matters, what you'd consider, especially in a UBO process, looking into the ultimate beneficial owner of those companies, the ultimate user of those products of that data, depending on those respective companies as one example. Also with an EDD, serious considerations should be looked at in terms of the industry, as I just alluded to, the type of business, as well as the type of customers. EDD should also, and this should be one of the top priorities of an EDD program, is getting a reasonable view on business ownership, on senior management and board members. Visibility and transparency into ownership, into senior members is imperative to understanding the company. It's worth mentioning at this point that oftentimes it's not the enterprise. It is enterprise that will be engaged in some activity, but you'll get the best idea of the enterprise and its direction based on the people that are running it and any kind of risks that are directly related to its C-suite, to its founders, to its UBOs. Last but not least, the location, a reasonable view on the location of the customers and suppliers of a company, its geographical presence generally, how far that extends. Obviously, this should all be consistent with the risk-based approach, and you should adjust accordingly based on your respective inputs, your risk appetite, your risk rating program, and how you should curtail your EDD program to fit your needs depending on the geographical location of your clients and the industry of your clients and the general risk profile of your clients. Okay, so the expansion of enhanced due diligence, it's extending beyond the kind of regulatory requirement. It's extending beyond just that simple application. And I think where we'll see it going is it being more use case specific, more kind of tiered to not only more tiered to industry, more tiered to your specific client, what they do, how they do it, their risk profile. So we'll kind of break that down a little bit. We kind of see it expanding beyond the regulatory requirement use case, as well as the kind of check the box mentality, the kind of commoditized due diligence. Let's get this done. Let's get it out of the way. As due diligence can, be used across the firm to kind of assess risk beyond this in terms of, third-party supplier use, vendor partner use. Basically, it can be an application for a variety of commercial relationships, whatever they may be. So in terms of breaking down our macro versus micro considerations, when we look to how to frame up our EDD program and how to kind of curtail it to be more use case specific. In terms of macro considerations, geopolitical implications. Now, this might seem like splitting hairs with the kind of jurisdictional implications, but the geopolitical implications speak to the relations between governments anywhere in the world effectively. So what we're alluding to here is the overall holistic picture. I would say the most recent example pre-COVID, and it's actually coming back to some extent, are the tariff and trade wars between the US and China, as well as different kind of protectionist agendas that have sprung up from different countries when it comes to trade. Some of this was actually exacerbated by COVID, as we saw around PPE and medicine and certain aspects of COVID-related efforts. So geopolitical implications are very important, especially when it comes to third parties and supply chains and leveraging supply chains in low-cost centers, low-cost labor centers to be more specific. And when we have more regulation popping up, like the Modern Slavery Act and more other ESG-related concerns. And the next macro consideration is the jurisdiction itself. What does a jurisdiction look like? What does its transparency look like? And I'm assuming 99% of the EDD programs or KYC AML programs, if not all of them, have a jurisdictional weighting aspect as an input based on transparency. An obvious thing to say, but I guess I'll say it anyhow, is that a jurisdiction and its government more so determines the commercial environment, and if it's a fair and productive or fair and productive environment for all commercial interests. So a jurisdictional consideration based on transparency, also now extending to social responsibility, is very much a risk rating that should help contextualize the existing research. Last but not least, industry-specific matters, as we alluded to. I feel these are all kind of mutually beneficial or mutually exclusive, rather, geopolitical, kind of that overarching theme. Jurisdictional and then industry. Industry and jurisdictional, I think, are determine one another based on the jurisdiction and based on the industry. So these need to be, in my opinion, properly weighted within your EDD program to properly contextualize the research you're going to conduct. The micro considerations, and these are more use case specific, and we'll dig into the actual research elements in a moment. But these are the micro considerations when we're pivoting to use case should be, especially as of late with the COVID disruption, business interruption and continuity. And that also alludes to supplier integrity, financial viability, ESG considerations, and ethical consumerism. So these are all the kind of more, I would argue, reputational, and there's regulatory bits here as well, but they also bleed into the legal and commercial risks that EDD should cover in its purview. So first of the macro considerations, jurisdictional risk. And what I did here is I literally pulled how we contextualize country risks within Refinitive's EDD program. Now, this is a sanitized version that was specific to a search subject in Mexico, but literally pulling together, FATF, which everyone in compliance knows is one of the foremost agencies in trying to harmonize the view on countries and their transparency. We also include the Corruption Perceptions Index, since it's a more straightforward numerical rating with its own weighting as well. So this stems from a country risk rating, which will give you a reasonable idea of the jurisdictional risk you face via a client, a partner, whomever is based out of that jurisdiction. Another way to contextualize your EDD program and the research you're bringing together, I'm a big fan of what does this mean and how should I summarize this for whatever stakeholder is going to have to look at this in a moment's notice. When we get into the research elements, all the research we're conducting, corporate filings, litigation, media, social media, regulatory, shareholders, whatever it may be, how does it apply to the things you should be looking at in an EDD program? How does it apply to my anti-money laundering program? I believe these are fundamental risk factors to be considered, and these obviously are interchangeable. This is how we summarize it within Refinitiv EDD to some extent, but obviously these things matter, and these things are regulatory concerns as well as legal, commercial, and reputational concerns. So scalable due diligence. Obviously, with an AML KYC program, and while you assess a client and apply risk, I believe you should use the geopolitical, jurisdiction, and industry factors to kind of assess the level of due diligence for a prospective or existing client. What we have laid out here is kind of, we have levels of due diligence of increasing complexity to kind of dig in deeper and determine what's necessary. If I were to break this down for the light plus standard versus premium, the pivot points, the lesser ones are your not commoditized per se, but the regulatory CDD baselines of negative media, global compliance checks, and then some language capabilities. Your pivot points, as you can probably see by the additional research elements, happen to be litigation, bankruptcy, and deeper regulatory checks, as well as retrieval of official corporate records. It's imperative, and this is dependent oftentimes upon jurisdiction, to get a reasonable view of corporate records of their control, of mainly their C-suite or who is actually in control of their shareholders in a reasonable sense of the ultimate beneficial owners. Also, within this kind of standard middle level consideration, I believe litigation is extremely important. It's the most direct line of sight into business practices, depending on the industry. Obviously, some litigation is course of business, but being able to see the litigation or lack thereof should obviously be quite the factor. And that's again dependent upon jurisdiction. The jurisdictional considerations around transparency, around the robustness of regulatory regime, around the robustness and the effectiveness of their legal system is something should definitely be weighted and properly assessed, especially when digging into litigation records. That also pertains to regulatory records, regulatory checks. In the instance where it's a low information jurisdiction and when there's a lack of visibility and it's a high risk client and you want to have the most fulsome information available to you, I think looking at a kind of premium report or a high level report, Refinitiv actually, our reports, we have a deep diving UBO structure built out that can literally go 4 layers deep in terms of determining shareholders, each level, how ownership is seemingly diluted as it goes through that. And Refinitiv itself is international, so we have in-house language capabilities, I believe 65 plus, as well as subject matter experts for specific jurisdictions to actually retrieve this information. So going back to the previous slide, all the information you see around a kind of premium level of EDD just stresses the importance of understanding everything you need to understand about a potential client. And that starts with, are they an active corporate entity? Who are they owned by? Are there ties to the government through their UBOs, through their shareholders? And what does that mean depending upon the jurisdiction? Also digging into those respective shareholders and trying to assess what risk they pose, if any. Maybe they pose zero risk and they're actually a value add. That's fantastic as well. Regardless, I believe enhanced EDD, especially at a premium level or in-depth level in low visibility jurisdictions, will give you the fulsome view you need to make an informed decision. Also, business intelligence and discrete reputational source inquiries are another step, especially for low visibility jurisdictions, where you can leverage through due diligence firms such as ours, investigative folks on the ground to get a more reasonable reputational view on business practices within that jurisdiction, especially where there's a less robust regulatory regime or less effective legal system. In terms of where EDD is going and those applications, I think everyone's been hearing ESG as a buzz term lately. There's a ton of financial institutions that are implementing ESG initiatives. There are plenty of private equity firms, VC firms, companies generally, even outside the financial institution space, ranging from oil and gas companies, you name it. So I believe ESG will become a big part of assessing, potential environmental, governance, and social risk related to business activities within a kind of KYC AML framework. It's obviously not directly tethered to a regulatory requirement just yet, but we're seeing around the world, like Australia specifically with their Modern Slavery Act legislation. Europe has Modern Slavery Act legislation as well. And then there's ESG legislation in the pipeline, or at least some regulatory parameters around ESG. As such, I think this is an important aspect of due diligence to be tacked on. And it's not only to determine the negative aspects of a client. In my opinion, it can also tout the accolades ESG wise, and that's more so for financial institutions and investment firms. When analyzing a potential investment, a potential client, a potential partner, I think it's the rule of thumb should not be only assess the negative, assess the positive, because obviously that might be something to tout or someone you want to be partnered with. So the ESG research methodology Refinitiv has built over the last few months and will be rolling out soon actually does it built a little bit of everything. It builds on top of our standard EDD report. So you get all the corporate filings, the assessment of media, of social media, of litigation, regulatory issues, of shareholder, but it also builds on top, digging into that entity to see if they literally have ESG related policies, related statements around their sustainability, corporate responsibility, and governance. And if they tout that, or if they quite literally do not have that posted online, we also dig into, do they have accolades? Have they been recognized for ESG? Is this somebody you want to partner with who is conducting ESG sensitive business, is not participating in what they call greenwashing, which is presenting yourself or posturing yourself as an environmentally friendly and or sensitive firm without actually abiding by those standards. Separately, we of course have an ESG controversy lookup with multiple facets ranging from modern slavery to corporate governance to social responsibility to sourcing, to kind of have a pretty comprehensive look at ESG considerations, negative and positive. So what's everybody else doing? This is always, everyone obviously wants to know what their competition is doing, what their peer group is doing, and what other industries are doing in terms of EDD and how they perceive that. This is a survey that was recently conducted by Refinitiv through a third party, and it consists of an assessment of approximately 1,800 global third-party relationship risk management and compliance professionals in terms of assessing how are they thinking about due diligence for third parties or for their relationships within those compliance capacities and risk management capacities. And I thought it was interesting, out of the 1,800 professionals interviewed spanning 16 countries, although most of these folks have enterprises that span multiple countries beyond 16, 45% said they conduct EDD or due diligence to protect their company from reputational risk first. Secondly, but a very close second, it was financial damage. And then third, 41% was ensuring third-party compliance with regulations, as well as compliance with regulations generally. It goes on from there, as you can see, to operational efficiency and then ESG concerns as it kind of goes down. But it kind of reinforces the point that EDD is not just a regulatory consideration anymore, as it gradually expands to envelop, reputational concerns and obviously the legal and commercial concerns we've gone over.
At this point, Andrew is going to take over. Andrew's going to provide sort of a better of understanding from your day-to-day operations what you should be doing and how you should be using the EDD information to make the decisions that you need to make.
Great. Thank you, Anu. Hi, everyone. So I'm in Ottawa today, and unbelievably, it's like 35 degrees Celsius. So it's a very, very warm day. And so that's quite unusual. But what I'm going to do is I'm going to go through how can you look at implementing EDD within your current due diligence programs. So I'm going to start with a flow. And so this is not like the gospel of how you should do it, but these are just suggestions as to how you could incorporate it. And when we started to incorporate EDD in our own platform, one of the things we did is that we spoke to a lot of customers, and they were using spreadsheets or they were using email systems to manage all the EDD reports, and nobody could remember, did we order a report for this high-risk customer, or when is the next time that we should be refreshing this report? So one of the things that, as Nick had pointed out, is that we could start off by saying, okay, look at your sanctions and PEP screening. Also look at your other lists. If you're using WorldCheck, the other list, or you're doing negative news, put all of that in there. Jurisdictional risk is big, based on some of the slides that we went through already. And then on top of that, then look at other risk factors. So depending on the risk models that you have deployed in your company, there might be other factors. It could be the age of the customer, it could be the industry that they're in, and that should give your overall risk score. So I wouldn't say that you shouldn't necessarily be requesting the EDD report only for high risk customers. I would say that you could probably use like a threshold. So if your risk modeling gives a score instead of just high, medium, and low, maybe it gives a score, then you could use a threshold for that. Then based on the EDD report outcome, then you can make a decision. Now, today, what are some of the building blocks that you have? So there's jurisdictional risk. There are a number of different sources for that. I know that on the Refinitiv platform, there's a country risk rating that some of you may be using. And in terms of just transparency or the corruption index, there are also other sources that you can get ideas for that. Then, of course, if you're doing any kind of watch list filtering or screening, then you have that component as well, as we talked about before. And then the enhanced due diligence reports will factor into that. The idea is, how am I using all of that, and how do I bring it all together to give me like my overarching view or the big picture of my risk with a customer? One of the things that you could be doing is kind of looking at it this way. And you could say, okay, the overall risk of the customer is, say, 87, so it's like very high risk situation. But then you want to know, have I done screening for that person? Have I done any watch list screening, or have I done sanctions screening for that customer? You know, it's OFAC, PEPs, sanctions list, whatever. Another component, especially in light of COVID, is ID verification, and we've seen big take up of that component. For a lot of customers, ID verification has now become really important in this virtual world. So if you verify the person's identity, you could look at the score of that. Did they fail? Did they pass? Look at that as well. And then from there, depending on the risk score, have you done an EDD report? And just kind of bringing the whole thing together. Now, this is the important point. It is, can you actually get all of those insights in that same platform? And that's the difficult part, because if you have a situation where I'm doing some stuff in spreadsheets, have a whole bunch of stuff in emails and so on, then how am I really addressing this? Another issue with this too is that just being able to just stay in the one place and just kind of see the outcome of these different investigations. It might be that you have a team that's doing the investigation, just so that you have some comfort that they're actually doing the work. When we looked at the EDD reports and how we look at automating them, we thought about, how do you automate the process? And this is one of the things that we've seen a lot in our customer base, is where the compliance teams recognize that having compliance just being done by their team is a challenge. So having kind of workflow or business process automation that pushes different due diligence activities out into remote locations, into branches, to the customer service guys or persons doing even wires and drafts in branches, remote locations. That's a big part of the capabilities that they need. So this is just one that we just a sample of different workflows that you could implement. You could have a situation where the customer is being onboarded, then you could initially verify the identity. Sometimes customers said, well, I want to just do the watch list screening first, and my response to that is, but do you know who the person really is? So if the person gave you identity that is a fraudulent identity and they are pretending to be me, then what's the point in screening me, Andrew Simpson, when that person is not Andrew Simpson? So validate and verify the identity, I think, is important. And then from there, you can either reject the customer, or you could then go to another phase in your due diligence process, which is your watch list screening. Then depending on the outcome of that, you can still reject the customer if that customer turns up to be very high risk customer, involved in terrorist financing, involved in human trafficking. You don't want to be doing business with them. But let's say that, yeah, it's acceptable. You could also put in another step here, which is like just looking at the overall risk scoring. So if the risk scoring is low or below a certain threshold, then you can say, I'm going to accept this customer and onboard them. However, if that risk scoring is relatively high, then you could request an EDD. And that's just one approach. Sometimes we'll find that customers want to just request EDD based on just jurisdiction, just based on industry. Those are necessary. Or it could be, especially on the supply chain side, it is that this is a critical supplier for you, and based on that, then based on their importance, you have to do a deeper level of due diligence. So let's say that you have done that, you do the due diligence. At the end of the due diligence, then everything is okay. You accept the customer. But let's say that something was wrong, you could then reject them. And these are just samples of different ways that you can approach it. But as you can see, the idea is everything is consolidated in your overall platform. So whatever platform you're using, that's the idea. And we've seen where a lot of people are kind of trying to consolidate these platforms instead of doing ID verification in one area, screening in one area, due diligence in one area, the case management is somewhere else. They've tried to kind of bring everything together. So another aspect of this is I've accepted the customer, but periodically, maybe annually, I want to then get a new and updated EDD report for that customer. So that's another area here. So this is like a time-based trigger that goes in and just automatically requests the EDD report again. Okay. So those are some of the things that you could be doing in terms of how to set up that automated process. Just keeping it really simple. We try to keep these workflow automations really simple. Don't overthink it. And then beyond that, we wanted to just show you, okay, so how the report comes into the platform and how do you work that report. So when you're making the request for an EDD report, you have like a primary subject, and then from there you can say I also want to add an additional subject. So this is another subject. So you could be these are just made up names, not real, right? So Skyble is the name of the company. I don't know if there is such a company. And Delroy Bailey is just another name that we came up with. Hopefully nobody on the webinar is named Delroy Bailey. And so you get the report comes in, you can see in the application, it's tracking everything. So, you know, if you ever get audited, if you have to track and trace what happened with this situation, what did we do, you can see the full history of what is going on. Another thing too is that we also are allowing you to do what we call indicators. So in reviewing the report and the way that the Refinitiv report comes back, it really tells you right off the top that, hey, these are the type of risks that I'm seeing. So you can tag the risks here. You can say, I'm seeing risks around bribery and corruption, and I'm also seeing risks around money laundering. So if those are the two that you're seeing, you tag them, and that can also influence what happens in how this is processed. Then from there, you can, you request the report. This is all highly automated. There's a connection between the application and the researchers. And so as the report becomes available, then it comes back in, you get your notification. It comes in as an attachment as well. So at any point in time, someone can go in, go to that request and just download the report and take a look at it. So this is just an idea of how the implementation is done, the kind of usability that you will see with the new EDD reports within the LSA platform. So those are just simple, practical ways of doing the implementation, keeping it really simple, and just consolidating all the due diligence work in one area so that you're not running all over the place trying to find things. Nick and I kind of went through a lot of this as well, but I think if you went through some of Nick's areas, it's really that you have to kind of evolve what we're doing around EDD, start looking into different aspects, not just some of the areas that you've looked at before, but jurisdictional risk, litigation, adverse media as well. And it's not just a regulatory issue. I think that was one of the things that Nick really did awesome during his presentation, is that he talked about just how all of this is evolving, and it's not just looking at saying, hey, I have a third party that is a problem, but it could be I have a third party that presents an opportunity. So it's not just the bad insights, the good insights are also important. Anything in terms of mergers and acquisitions, I mean, yesterday we had a customer called and they said, hey, we're getting into a relationship with a company in Ecuador, and we will need to do a deeper level of due diligence because of how critical they're going to be to what we do in terms of our supply chain. And then Nick really kind of went through some of the ESG and third-party agreements and just how that is evolving and how that is changing. The technology-enabled EDD is critical because, as in anything and everything, especially since we have gotten into the COVID era, you're going to find that everything is going to be virtual. A lot more is going to be virtual, and so you want to make sure that your programs are truly technology enabled and you're not using too many disparate systems and due diligence artifacts are all over the place. So those are the kind of key takeaways that we'd like you to have.
So with that, I would like to close off the presentation. I'd like to thank Andrew and Nick for their insights into the EDD process. If you still have questions about EDD, don't be afraid to email us. We will happily answer you back via email, or we'll give you a call, and hopefully we can get some of these questions answered. So with that, I would like to end the presentation, and I hope that you have a wonderful day. Thank you very much.